It is another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the FMBQ studios in Lagos.
And I'm Grace Agbarago. It's the 24th of April. We thank you for joining us at this time on the show.
All right, let's begin with news now for this Friday. Yoweri Museveni joined Aliko Dangote and William Ruto to discuss strategies for building the continent's infrastructure and driving economic growth. During the session, Dangote revealed plans to partner with Kenya and Uganda to develop a major oil refinery in Tanzania aimed at boosting energy self-sufficiency and industrial expansion in the region. Here are excerpts.
It would have been better if we, because like some of the other people, like the Chinese, the people like Lee Kuan Yew, they saw it earlier. But Africa also had a lot of additional problems. Like, for instance, landlocked countries.
Right.
If you are landlocked, even if you see something, if the coastal countries don't see it properly, you can't move. So the mistakes are our biggest teachers. Because, and the crises. The youth have no jobs. So I think people can now see, can listen more. Because there was a lure. It was really ideological intoxication.
You know, very big financial institutions. We have big entrepreneurs. What actually caused the delay before was that normally when you go to those financial institutions, the interest is not to develop Africa. The interest is to develop themselves. And, you know, today we have big financial institutions that are at least they can listen to the big, you know, entrepreneurs and see how do we develop and build our nation. We have made a lot of mistakes in the past where we've been relying on foreign investors. A foreign investor will not come without the leadership of domestic investor. So a domestic investor must take the risk and start developing your own continent, not for you to wait for foreign investors. Foreign investors will only come when things are looking rosy and good.
In the meantime, the Africa Finance Corporation and the African Development Bank have each committed $500 million towards the development of a major railway link connecting Zambia's copper belt to global markets via Angola's port of Lobito. The project, which will also receive $320 million in funding from Italy, is being positioned as a strategic export corridor to improve mineral shipping efficiency from Southern Africa to international markets. Meanwhile, Kenya will acquire an additional $25 million, that's about 3.23 billion Kenyan shillings stake in Africa Finance Corporation, increasing its exposure to the lender's balance sheet and governance structure. The move comes as the AFC prepares to open its first office outside Nigeria, with Nairobi selected as its regional base to support expanded operations across East Africa. In South Africa, United Capital PLC has reported a 17% increase in full year 2025 profits, reflecting strong performance across its business segments. At its annual meeting, Peter Shade, Group CEO, highlighted the firm's growth strategy, market outlook, and commitment to delivering value to shareholders. Let's listen.
We have a policy guiding that. Not only that, on the part of the management, in line with regulation, we now have Sustainability Steering Committee of the management because we are looking onto that very, very tenaciously. We have a short-term agenda, medium-term agenda, and long-term agenda. In terms of short-term, we have structured everything. If you look at our annual report, for the first time, we have a 28-page write-up about sustainability of what we did in 2025. And that is just the beginning of the journey. a lot of our structure, we're going to do that. Next, we are going to be developing products that are sustainability linked, and we're going to pursue that to a logical conclusion. And going forward, we want to be a sustainable financial institution in all our dealings, and we're going to still continue to look at everything that is required for us to do this. So, which is very, very important for us. We are not going to rest because sustainability is going to be a center. We now have a desk for sustainability, now called Strategy and Sustainability, and we have someone that is currently heading that. We are not looking back at all. Yes, the operating environment might be turbulent, but one thing that is sure, with the crop of the team members, colleagues that I have, the board and the management, I can assure you, be rest assured, what we have always said, that we want to increase the wealth of the shareholder, and we will not rest until we get to a point whereby you are giving 20 naira dividend. So we will work everything to ensure that, because that is, sometimes we're getting 30 kobo. From 30 kobo, we're 1 naira. That is it. It's a journey, and we're doing that. Permit me, just like
in Nigeria, the Federal Competition and the Consumer Protection Commission has approved 5 companies to provide digital airtime and data lending services following new regulatory requirements introduced to govern telecom-related credit services. The licensed firms include Total Tim Nigeria Limited, Rain Interactive Median CLS Limited, Mode NG Applications Nigeria Limited, Cloud Interactive Associate Limited, and Coverage Broadband Limited, all of which will operate under stricter rules on licensing, data privacy, and debt recovery practices. The approval comes after major mobile operators such as MTN and Airtel temporarily suspended their own airtime borrowing services, with the new players expected to deliver credit through digital platforms and mobile applications rather than traditional USSD systems. In Namibia, the Bank of Namibia has hosted a corporate governance seminar bringing together market participants to discuss best practices and regulatory standards. Tian Bazuin, CEO of the Namibia Securities Exchange, highlighted the importance of strong governance frameworks, transparency, and accountability in building confidence in capital markets. Let's listen.
How you apply those principles is specific to your business. And if you don't apply it, then you explain why you don't do that. So NAMCode in King 3 was apply or explain. So if you applied the principle, then you didn't go into any detail because there was nothing to explain. King 4 and King 5 have gone to apply and explain, meaning it's not a question of just saying, yes, I've done it. You have to explain how you've done it. And that means every business applies it to the way that it makes sense for them. A small business will not be applying it in the same way that a bank and a multinational is doing it, because there are very different ways of doing it, and how it's implemented would literally change from person or from company to company. But the underlying building blocks towards that, having independent members of a board, having an audit and risk committee, these are still the blocks to which those principles are applied. And I think to that point, maybe one of the things that I really wanted to bring across is probably the most important understanding is the difference between the shareholder, the board, and management. I think this gets misunderstood and misconstrued probably the most, because usually, or in most businesses, you start off with a single shareholder that is also the manager and also the employee. As time progresses and as the business grows, that requires a little bit of a differentiation in terms of roles. And it's usually very difficult for owner businesses to understand that there's value in having a board and having independent voices on that board and actually share in the decision making. Because if you've built the business from scratch, then obviously you think you know best. History, studies, everything has shown that, specifically in listed companies, having that independence on your board actually improves the performance of the company over the long term. How you apply those
In
principles.
other news, Uganda's parliament has approved an additional 145 billion Ugandan shillings injection into Uganda Airlines as government deepens support for the national carrier despite ongoing financial losses and high operating costs. The funds are aimed at stabilizing operations, improving efficiency, and supporting the airline's ongoing fleet expansion drive as it seeks to expand routes and strengthen regional connectivity. Finally, on News Now, this Friday, Cameroon has signed a cooperation agreement with the Commonwealth Enterprise and Investment Council at the 5th Commonwealth Trade and Investment Summit, establishing a regional investment hub covering Cameroon, Gabon, Togo, and Sierra Leone. The new regional office is expected to support trade expansion and investment mobilization across the 4 countries with formal legal status under the deal. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly, just after the break, with Grace at the FMDQ Archives Room giving us our market rounds.
There's absolutely no doubt that the world is facing tremendous disruption. And I'll speak for ourselves in trade. Of course, we're facing some of the biggest disruptions we've seen in 8 decades or so since the World Trading System has been founded. But I will come to it, but I hesitate to say it's all broken. So I'll be disagreeing with you and some of your characterizations from time to time, because we're also finding quite a bit of resilience and adaptability built into the system. But let's come back to the broken, if you want to use that word. I call it disrupted part. There's really no doubt about that. Great disruption, great uncertainty, great worry. And of course, at the WTO, we're quite worried about the war and its impact, as is every other international organization. And I was a month ago, I think, on CNN with Richard Quest, and when he was asking me, that's a month ago, biggest worry about the war, I said, yes, energy is a big issue, but I'm actually worried about fertilizer.
Yes.
And the ability to get fertilizer shipments through, because what's going to happen is that's going to have, and it was the beginning of the planting season in some parts of the world. Once farmers miss, then, or switch to other crops that are less fertilizer intensive, then we may find food prices, food shortages, production of certain crops, either the productivity goes down or they don't produce some of them at all, and then food prices will go up. And you know what happened during 2008, 2009 financial and food crisis?
Here are 3 things to know about the economies of Sub-Saharan Africa. 1, Sub-Saharan Africa entered 2026 reaping the benefits of hard-won stabilization gains after a strong 2025. Economic activity accelerated broadly across country groups, with regional growth estimated at about 4.5%, the fastest in a decade. 2, the war in the Middle East has clouded the region's economic outlook. pushing up the prices of oil, fertilizers, and shipping. It's also disrupting trade and tourism. While impacts vary widely across countries, it's hitting poor and fragile nations the hardest. As a result, our revised outlook for the region's economic growth is 4.3% for 2026. 3. Downside risks are significant amid high global uncertainty and regional macroeconomic vulnerabilities. An escalation of the conflict in the Middle East, tighter global financial conditions, and climate shocks could worsen the outlook. This is a time for caution, consistency, and credibility. Near-term priorities are to keep inflation expectations as well anchored as possible and protect the most vulnerable from higher living costs through targeted support. Countries need to accelerate structural reforms for growth and diversification.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for today's market reports. Hello there, Grace.
So let's take a look at how the markets traded today, starting off with the equities. The NGX All-Share Index climbed 1.30% to 225,724.33, while the BRBM in Abidjan closed flat at 402.02. The Nairobi Securities Exchange rose 0.33% to 207.09. In the South, the Johannesburg Stock Exchange edged up 0.20% to 116,685.56, while Mauritius Semdex slipped 0.28%. In North Africa, Morocco's MASI declined 1.07%, while Egypt's EGX30 is closed. Let's do a quick round on some of the Pan-African currencies. The Rand weakened 0.19% to 16.54 against the US dollar, while the Egyptian pound softened 0.02% to 52.62. The CFA franc declined 0.25% to 560.38, and the Kenyan shilling eased 0.05% to 129.29. The Moroccan dirham slipped 0.16% to 9.26, and the naira weakened 0.42% to 1,354 naira 86 kobo as at 12:58 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude edged up 0.22% to $105.30, while US WTI dipped 0.06% to $95.79. Natural gas fell 2.22% to $2.55, and RBOB gasoline declined 0.92% to $3.43 as at 12:52 GMT. To metals prices, gold slipped 0.09%, white copper declined 1.07% to $6.01, and aluminium fell 1.89% to $1,999.80. Aluminium rose 0.58% to $3,636.14, while iron ore edged down 0.05% as at 12:52 GMT. Finally, to soft prices. Cocoa dropped 1.62% to $3,402. Coffee climbed 1.30% to $304.25, while cotton slipped 0.62%. Palm oil gained 0.23% to $1,139.22, and sugar rose 0.72% to $13.99 as at 12:55 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up on this last day of the week. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and do have a splendid weekend.